Buckle up for an electrifying start to your week with today's edition of Tech Stocks Daily. We're diving headfirst into a day ripe with game-changing tech developments. From Apple's strategic leaps in privacy and electric vehicle ventures, to Google's AI breakthroughs and Chrome's hiccup, plus Microsoft's bold French AI investment and Squarespace's privatization drama, it's a roller coaster of innovation, rivalry, and potential industry upheavals. And if that wasn't exciting enough, we've got a special focus on why Apple's latest moves could make it the stock to watch. Prepare to be informed, inspired, and maybe even a bit surprised as we unpack the seismic shifts shaping the tech landscape. Let's get into it. In today's tech headlines, Apple has been making waves across various sectors, from enhancing users' privacy and security to shaking the foundations of the digital payment ecosystem and venturing into potential groundbreaking collaborations with electric vehicle manufacturers. Here's a deep dive into why Apple has been at the forefront of tech news today. First and foremost, Apple's proactive stance on user privacy has taken a significant leap forward in collaboration with Alphabet Inc., its long-standing competitor yet, in this instance, an ally. Together, they announced a pivotal update aimed at bolstering alerts for unwanted Bluetooth tracking device recognition, a feature rolling out across iOS and Android devices. This move not only addresses growing concerns over stalking incidents involving Bluetooth devices like Apple's AirTag, but also marks a rare moment of solidarity between two tech titans for the greater good of user privacy and safety. Competitors such as Chipolo, Anker, and Pebblebee are hopping on the bandwagon, pledging support for this initiative in future products, signaling an industry-wide shift towards more secure personal device tracking. Second, amidst the battlefield of digital payment services, PayPal has stood its ground against growing pressures from Apple Pay and other services powered by big tech conglomerates like Alphabet Inc. Apple's relentless expansion into the digital wallet space has posed a formidable challenge to PayPal's dominance. Despite this, PayPal's recent financial discourse shines a light on its resilience and strategy to pivot towards sustainable growth, sharpening its focus on cost discipline and enriched service offerings. Apple's aggressive push into this segment underlines its ambition to create an all-encompassing ecosystem that keeps users tethered to its services, raising important questions about the future landscape of digital payments and the balance of power among leading tech giants. Third, Apple's rumored near finalization of a partnership with OpenAI to integrate ChatGPT technology into iPhones represents a strategic leap towards embedding advanced AI capabilities into consumer tech. This prospective collaboration hints at Apple's broader ambitions to revolutionize user interaction with its devices, potentially transforming Siri into a more dynamic and contextually aware assistant. Beyond a mere feature upgrade, this move could pave the way for Apple to usher in a new era of AI-driven applications, further entrenching its products at the heart of daily digital experiences. Finally, stepping beyond its conventional product lineup, Apple is reportedly exploring a collaboration with Rivian, the American electric vehicle manufacturer. While details remain speculative, such a partnership could significantly amplify Apple's footprint in the automotive sector, marrying its software and user experience prowess with Rivian's innovative EV technology. This venture could redefine mobility and tech integration, setting a new benchmark for the smart vehicles of tomorrow. Each of these developments showcases Apple's multifaceted strategy to not only expand its ecosystem, but also to fortify its commitments to privacy, innovation, and potentially redefine mobility. In doing so, Apple continues to sculpt the contours of the tech industry, steering it towards a future where consumer experience, security, and groundbreaking technology intersect more seamlessly than ever before. Google has been making waves in the tech community, capturing headlines with a series of significant developments that underscore its continued evolution and ambition in the digital landscape. The heart of Google's latest buzz centers around three main areas: its AI advancements showcased at Google I/O, a competitive shakeup with OpenAI, and a notable concern regarding Chrome for Android users. At the forefront, Google's annual developer conference, Google I/O, was a treasure trove of announcements, particularly highlighting groundbreaking strides in artificial intelligence. Buffet analyst Justin Post projected the event to spotlight AI integration across Google's ecosystem, with an emphasis on search and mobile technology. This includes the deeper integration of Google's AI model, Gemini, enhancing search functionalities and mobile capabilities, which could redefine user interaction by offering more personalized and intuitive experiences. The introduction of Pixie, a revamped version of Google's digital assistant powered by Gemini, showcases Google's commitment to pushing the envelope in AI-driven personal assistance, boasting multimodal capabilities that could significantly elevate the smartphone user experience. In another vein, Google found itself on a competitive edge as news broke about OpenAI's event causing a stir in the market, resulting in a temporary dip in Alphabet's market cap. The apprehension stemmed from speculation around OpenAI's expected announcement, potentially introducing a new product that could rival Google's stronghold in search and AI utilities. While the details of OpenAI's announcement remained elusive, it underscored the volatile landscape of AI technology sectors, where innovation and competition are in constant flux. Despite the knee-jerk market reaction, Google's robust foundation in AI through projects like Google Cloud and DeepMind reflects a solid position against emerging competitors. hinting at AI as an area of opportunity rather than a threat for the tech giant. Moreover, Google Chrome for Android users encountered a security hiccup, highlighting a problem where clearing the browser cache might inadvertently delete saved passwords without requiring additional authentication. This incident not only raised concerns about data privacy and security, but also prompted a response from Google to address the UI issue, ensuring a safer user experience in future updates. It serves as a reminder of the intricate challenges tech companies face in balancing feature-rich services with user security and privacy. Google's presence in the news today paints a picture of a technology behemoth that is at once pioneering in AI and facing the growing pains of rapid innovation and fierce competition. With Google I/O's impressive showcase, the competitive jostle with OpenAI, and Chrome's snag in user privacy, Google continues to be a key player, steering the future direction of technology while navigating the complexities of the tech industry's ever-evolving landscape. Today, the tech giant Microsoft has made major headlines with a trailblazing commitment to France's burgeoning artificial intelligence sector and advances in its software services, marking a substantial leap towards fostering technological growth and grappling with regulatory scrutiny. Leading the charge, Microsoft announced a monumental investment of €4 billion to supercharge France's artificial intelligence capabilities. This grand gesture unfolded at President Emmanuel Macron's Choose France summit, a strategic move aimed at magnetizing foreign investments and reinforcing economic development. Central to their plan, Microsoft aims to enrich the French tech landscape by deploying next-generation cloud and AI infrastructure. A standout aspect of this ambitious project is the provision of up to 25,000 advanced graphics processing units to the nation by the end of 2025. Furthermore, Microsoft commits to an AI skilling initiative that promises to train 1 million French individuals by 2027, equipping them with the essential skills for a future poised to be dominated by AI technology. Simultaneously, Microsoft's endeavors in France have garnered attention for their promised impact on local job creation, innovation, and digital sovereignty. By investing in France's AI economy, Microsoft not only cements its role as a pivotal tech player, but also aligns with Macron's vision of transforming France into a global tech hub. However, it's not just investments that have placed Microsoft in the spotlight. The tech behemoth faces heightened scrutiny from the European Union over competition concerns, particularly regarding its video conferencing platform Teams. The EU is gearing up to level formal antitrust charges against Microsoft, alleging that it has been stifling competition by integrating Teams with its broader software suite in a way that disadvantages rivals. This development marks a significant shift, potentially ending a decade-long period of relative peace between Microsoft and European regulators, since a €561 million fine was imposed on the company in 2013 for previous competition issues. Adding to the complexity, Microsoft is also testing new features in Windows 11, with Start Menu Companions being a highlight. This innovation introduces floating widgets that could transform user interactions with the operating system, showcasing Microsoft's ongoing commitment to software excellence and user-centric design. In parallel, Microsoft reaffirmed its position in the competitive tech market by pledging substantial investments in France's tech evolution, signaling robust growth and innovation pathways. However, the looming EU regulatory challenges underscore the intricate balance Microsoft must navigate between innovation and compliance in a rapidly evolving digital world. Today, Microsoft stands at the crossroads of driving technological advancement and addressing antitrust concerns, embodying the multifaceted nature of being a tech titan in today's global stage. In today's tech news spotlight, Squarespace, the renowned software company famous for helping entrepreneurs build brands and businesses online, is making headlines with a significant corporate maneuver. Squarespace Inc. has announced an all-cash deal to go private, orchestrated by the global private equity firm Primera. This transaction, valued at approximately $6.9 billion, marks a pivotal chapter in Squarespace's journey, offering $44 per share to its shareholders. This deal is not only noteworthy because of its sheer scale, but also due to the substantial premium it represents over recent trading prices, signaling strong confidence in Squarespace's future prospects from Primera's end. However, this deal has stirred a pot of controversy and scrutiny. Just behind the headlines of this transformative deal are swirling clouds of investigations and shareholder alerts. Chief among the concerns is the question of fairness regarding the deal price. A slew of law firms, including Andrews & Springer LLC, the Shaw Law Firm, and Wohl & Fruchter LLP, have launched investigations into potential breaches of fiduciary duty by Squarespace's board of directors. These investigations pivot around the deal's valuation, whether it fairly reflects the company's worth, and whether shareholders are getting an equitable shake, especially when juxtaposed with analysis suggesting higher target prices from Wall Street analysts. Adding layers of complexity to this scenario is Anthony Casalena, Squarespace's CEO's pivotal role in the agreement. Casalena, alongside significant investors like General Atlantic and Excel, will not only vote in favor of the deal, but will also retain a considerable portion of his equity and continue to helm Squarespace as its CEO post-transition. This situation has raised eyebrows, particularly around whether the deal primarily benefits a select group of major stakeholders at the expense of minority shareholders. Today's developments have rippled through the tech world, presenting a mix of optimism and concern. On one hand, going private with Premiera's backing could provide Squarespace with the agility and resources to further innovate and dominate the online platform space for entrepreneurs and small businesses. On the other, the unfolding legal investigations add a veneer of uncertainty and contentiousness to the deal, sparking debates on corporate governance and shareholder equity. As we wrap up this segment, the Squarespace narrative is laden with both promise and contention. It's a story of growth, strategic shifts, and the intricate dance between corporate leadership and shareholder rights. What are your thoughts on this significant tech news? Do you see the Squarespace deal as a fair victory for all, or do you have concerns about the implications for shareholders? Your insights and opinions enrich our discussion, so please drop your comments below and let's keep the conversation going. Diving into the whirlwind of today's tech news, if I had to pick one stock to focus on, it would be Apple. Given the avalanche of developments surrounding Apple, from its strides in user privacy and security enhancements with competitors like Alphabet Inc., to its potential groundbreaking collaborations with electric vehicle manufacturers such as Rivian, not to mention the rumored near finalization of a partnership with OpenAI, the decision sways heavily towards a strong buy recommendation. Here's why. First, Apple's aggressive push into enhancing user privacy with initiatives like the unwanted Bluetooth tracking device recognition is not just about adding another feature, it's about reinforcing user trust and loyalty, which is paramount in today's data-sensitive world. When two giants like Apple and Alphabet Inc. unite for user privacy, it sends a strong signal about Apple's commitment to safeguarding user interests, which can significantly bolster consumer confidence. Second, the implication of Apple potentially integrating ChatGPT technology into iPhones through a partnership with OpenAI cannot be overstated. This kind of advanced AI capability could revolutionize the way users interact with their iPhones, making Siri infinitely more dynamic and contextually aware. It positions Apple at the forefront of the AI revolution in consumer technology, potentially leading to increased sales and further entrenching the iPhone as a must-have device in the digital age. Finally, Apple's rumored venture into the electric vehicle space, in collaboration with Rivian, presents a huge growth opportunity. If Apple can infuse its renowned design and software capabilities into the automotive industry, this could redefine smart mobility, opening up new revenue streams and possibly setting the stage for Apple's next big thing. However, enthusiasm comes with caution. It's crucial for listeners to conduct their own research before making investment decisions. The tech landscape is rapidly evolving, and while Apple's current trajectory seems promising based on today's news, market conditions, regulatory environments, and competitive dynamics can shift. Always consider your personal financial situation and consult with a financial advisor if unsure. The buy recommendation rests on Apple's innovative push and strategic partnerships, which seem to promise growth and expansion, possibly leading to increased stock value over time. Yet remember the golden rule of investing: do your homework, stay informed, and consider the long-term outlook. Wrapping up today's whirlwind of tech market activity, it's been a day brimming with strategic plays, privacy pushes, AI leaps, and significant shifts in the private equity landscape. From Apple's multifaceted advancements and security collaborations to Google's AI showcases and Microsoft's hefty investment in France's tech sector, not to mention Squarespace's controversial leap towards privatization, today's news paints a vivid picture of an industry in rapid evolution, showcasing the relentless drive for innovation, privacy, and strategic expansion amidst regulatory and competitive challenges. In the tech sphere, each day can dramatically alter the market landscape, bringing to light new opportunities, threats, and industry shifts that could influence our technological future. Such dynamism underscores the importance of staying informed and ahead of the curve. Remember, the insights provided today serve as a guide to navigating the complex world of tech investments, but they're just the tip of the iceberg. The tech world is vast and ever-evolving, and there's always more to explore, understand, and discuss. So dive deep, question everything, and keep that insatiable curiosity burning. If today's insights have sparked your interest or offered valuable information, don't keep it to yourself. Like, subscribe, and share this video with others who would benefit from staying in the loop on all things tech. Your engagement not only supports this channel, but fosters a broader community of informed and savvy tech enthusiasts and investors. And with that, I encourage you to stay eager, stay informed, and above all, stay tuned. There's always more to uncover in the tech world, and I'll be right here, ready to guide you through it, one day at a time.